Best performing major markets here. Part of the problem, according to the technical analysts from Oppenheimer, who expect the composite to tumble 18% in 3 months, they say that's what their charts point to, saying the rally unhealthy, it's been too steep. Darius from SJS joins us here on the program. Good morning, sir.
Morning.
What do you think? You think the China stocks are priced so dearly that they are set to hurt in the months to come?
They are priced very dearly, but I don't think that they will hurt because bubbles tend to last longer than people expect, as long as the drivers of those bubbles persist. And in China, the key driver is huge liquidity that the government mandated banks to extend to everybody, something that will be there during at least the third quarter of this year.
Are they going to need to pack more stimulus on top of the 4 trillion renminbi program? I mean, right now it's kind of like you shoot them up, right? It's like you're on stimulants, you're on crystal methamphetamines or something like that. The problem is if that wears off and you don't replace the dose, and I'm not advocating drug usage here for God's sake, but you know, you can have quite a bender and you can have quite a withdrawal period. What's the potential that they're going to go through that sort of thing?
China plans to spend most of the stimulus actually only next year, so they do not need to extend it until those plans are fulfilled, which will be in 2011, a horizon that investors don't really worry about. So I wouldn't think this is the issue. The issue is how fast the Chinese central bank forces commercial banks to slow their lending growth. And I think that this is something that we'll worry about maybe in the fourth quarter of this year. Right. Until then, probably the bubble will grow.
We saw the PMI up yesterday, right? I mean, the manufacturing signal that we got yesterday, Purchasing Managers Index, almost 53, which means expansion. Are they making the right things, or are they making the things that go into inventory, or are exports actually picking up? That's a key question, right?
Exports are still very weak, but remember, Chinese growth is driven by domestic demand, both investments and consumption. So growth in industrial output reflects buying from factories that are expanding their plants or infrastructure, and from consumers whose demand is also very healthy. So I think they are making the right things most of the time.
What are they going to do with monetary policy? Are they in a sweet spot right now, or is a move called for by the People's Bank?
I think that they will start tightening official rates in the first quarter of next year.
First quarter next year, so no move August, September, October, November, December. You got 5 months of free money, or basically free and easy?
I used to think that they will move in the fourth quarter, but recently there were signs from them that they will wait until the Fed starts hiking, which I think will not happen until December. China wants to be cautious, wants to wait for the U.S. The official rates will not move until first quarter next year, but they're already tightening by lifting the rates on open market operations gradually. Okay, Darius, stay put.
Okay, we'll continue this chat a little bit. Some say the worst is over for the car market in America. How does that mesh with the losses that many reported in July? We'll take a sneak peek. See 264% for Ford this year. 264%. Man, standalone of sorts in a class of their own. We used to call them found on road dead. Can you imagine that was a high school joke? Well, don't joke about them anymore. Car sales in America continue to tumble in July, down something like, check the math, 12% from the year ago period. Some say the worst is over. Boy, that's going to be the most overused cliche. But, big but, Asian manufacturers seem to be resonating on many, many fronts. Right or wrong? Mike.
Well, yeah, the question is the worst over? Is the money over? The cash for clunkers handouts, because that has affected sales in July. Toyota, Honda and Nissan all reported double-digit drops compared to a year earlier. However, Toyota's 11% sales slide was the smallest this year. It sold more cars and trucks than Ford, which had beat it the previous 3 months. Honda's sales dropping 17%, also the smallest drop this year. Nissan selling 25% fewer cars and light trucks. Ford increased sales, cash for clunkers incentives making the Focus the best-selling fuel-efficient car under the government scheme. Ford was not the only automaker to raise sales. Last month, Fuji Heavy's Subaru brand seeing a 34% increase, helped by the new Legacy and the Outback. South Korean car makers also having a positive month. Hyundai raising output in Alabama to meet demand.
For us, it was their second best July ever. In an industry that, even though we're kind of doing cartwheels and giving high fives within the industry, it was an 11 million annualized sales rate, right? So not really so good by historical standards. But for us, it was the second best July ever, one of our best all-time sales months. So we were literally running out of cars. We're getting a lot of calls from our dealers. And so we've cranked our Alabama plant, where we make about half of our U.S. sales. We've cranked that up to a full 5-day production schedule.
Fuji Heavy's American depository receipts jumped 8.4%. It makes the Subaru brand. Of course, Toyota, Honda and Nissan's ADRs also rising. Hyundai doesn't have an ADR. Now, this may translate into gains for the Nikkei. Chicago futures last trading 1% higher than the Tokyo close, 10,485. In Osaka, we're looking at 10,460, still higher than the Tokyo close at 10,352. Boni ADRs up by 2.4%, Bernie.
You said Honda doesn't have an ADR? I mean, Toyota,
no, Hyundai.
I know
Hyundai.
Does. Oh, Hyundai, okay. But they're so popular, you'd think that they'd want to let people invest in a car that they're buying 12% more of in the month of July or something like that. I'm going to have to call John back from Hyundai America and maybe give him a little bit of unsolicited advice. Let's get back to Darius and find out what's going on in the China context here. Interesting. Can we turn on this camera here? Yeah, right here, camera 3. I just want to show you something. This is kind of funny. Here, I was just glancing through the papers. That's why my desk is a mess here. Do you see that there? Can we get that? Or is it going to take a little longer to do? Okay, give it a couple seconds there. Parts greater than the GDP sum. Okay, that's not great. That's why I'm an anchor and not a cameraman. Darius, the total value of GDP product announced by 31 provinces and municipalities significantly higher than the national figure by the government. According to figures by local governments, output came to 15.4 trillion yuan. Federal government's is 13.9.
That confirms all of our suspicions about the quality of Chinese data, right?
Does this mean you can't believe anything coming out of China these days? Why do we even talk about it? No, it's not that bad, is it? Just rounding errors or what?
Well, I don't think it's that bad, but the margin of error here is really huge. Whenever you forecast Chinese data, you have to wonder, should I forecast something I really believe will happen, or should I forecast what they will actually report?
And I thought the conventional standard around the world was facts, only the facts, ma'am.
That's true, that's true. But in case of China, there has always been doubts about that. But what you actually have to do is you have to have at the back of your mind what is actually happening with the real economy, which will be important, say, for example, for commodity prices. And then you have to have in mind what they will report, which will be an important driver of their policy and probably more important for the equity markets. So, I mean, this is something you have to live with, that there is always concerns about reliability of data.
What in the China context are people ignoring? There's always some missing link that people forget to pick up on, that they don't talk about, that they end up talking about 2 or 3 months out. I'm sure we'll be talking about something which we haven't thought of. Is there, I mean, you'd like to think with the benefit of well over a year and a half of troubles that they're dealing with, the stimulus, and trying to balance the, export deterioration with domestic demand, raise the level of domestic consumption. There might be some missing link here. Export tax rebates or something like that, or changes to the VAT rules. Is there something that hasn't been discussed in the media in the last couple of weeks that might be a good thing to pick up on?
I think in terms of the quality of data, we are not going to face anything new. But in terms of how the policy may have to change in the medium term, it will be inflation. Inflation in China will be running at already 4% year on year in the middle of next year. And policymakers will gradually begin to focus again on what it is doing to the consumer. They really care about social stability. A lot of still poor people don't want to see huge hikes in their energy or food bills.
That's not a 1 or 2 year program, though, is it? I mean, that's more of a midterm
This is a problem that I think will start to emerge, say, in the second quarter of next year.
What about inflation? Are we at the beginning of what is going to be quite an asset price inflation bubble? That seems to be the sort of nagging fear out there.
For most Asian, and not only Asian economies, inflation is going to bottom out in the second quarter of this year. In China, for example, probably in July, which means that from now on, the focus on investors and policymakers will be on tightening, when to tighten policy and what it is going to be to do to the real economy.
Right.
So this will be the key driver of shifts in, let's say, exchange rate differentials.
Okay.
And as well as bond prices.
Good to see you, okay? I understand
here.
you're off to Hainan for a quick getaway.
I
Is
am.
that correct?
I am.
You'll love it. Hour 20 flight from Hong Kong. Nice for a long weekend. Darius Kowalczyk, SJet.
Thanks.
Up next, a morning call. Chicken and beer.